Well, let me welcome on board Puneet Dalmia from Dalmia Bharat to talk about, how their quarter has been. And Puneet, just going by the numbers, why the weakness in the EBITDA as well as the PAT margins? And, in that context, what kind of guidance would you hand out for the new year?
I think overall this has been a mixed year. I would say that our revenues were upwards of 11,000 crore and it increased by around 11.5%. PAT was almost flat, about 1160 crore, and EBITDA dipped by about 10% odd to 2400 as opposed to 2760 earlier. So I think we were not able to pass on the full cost increase to the customers. There has been good volume increase, but our costs went up by around 20% and the prices went up by only 3%. So I think the cost inflation basically ate into the margins and it dragged our profitability down. We also see continued headwinds right now. I think the global supply chains are disrupted. The Russia-Ukraine war is continuing, and energy and fuel prices are spiking up quite a bit. And these headwinds are likely to remain for a few more quarters. But we are seeing a demand uptick. The demand is coming back. So, we have to see how much of the cost inflation we can, pass to our customers. But I think, for the foreseeable few quarters, I expect the headwinds to remain.
Okay, so speaking of these headwinds, if we are seeing the costs higher by nearly 20%, are you going to look at more price hikes going forward? And how real is the fear of this demand destruction?
Look, this is a very competitive industry. There are almost, more than 30 players in this industry. And the whether we can pass on the, cost inflation depends on the demand supply scenario. We are heading into the rainy season in this quarter. So I'm cautious. I think this kind of cost spike is not easy to absorb for any industry. And we are seeing it being passed on in most of the building materials, whether it is steel, whether it is electricals or paints. So we are seeing that most industries are passing this on, although with a little bit of a lag. So we have to see, how much lag there will be in the cement sector. And I think it all depends on how quickly demand comes back and how soon. But I think this quarter, because it's a monsoon quarter, I think it will. I'm cautious that margin compression will continue.
So, given all of this volatility, maybe it's not fair to ask what kind of margin compression is exactly likely. But if you could give us a ballpark, what exactly is it that you're pricing in, given that you're flagging off all of these concerns?
No, look, I think we are taking a lot of steps to mitigate the headwinds. So we are investing a lot in renewable energy and waste heat recovery systems. Our energy mix, will be around 30% by end of financial year 23 in terms of renewable energy. And I think that has very good returns right now, given the cost of power. Also, we are trying to diversify our fuel mix. We are using a lot of municipal waste, and we are using a lot of recycled waste from the industry. We are using a lot of RDF, which is reprocessed plastic. So I think we are trying to diversify our fuel and bring costs down as much as possible. But despite that, there will be some margin compression unless we are able to pass on the price, pass on some of the cost increase to our customers. So as I said, I'm cautious. This year is going to be a little tough, but I think next year is election year, or at least we are going into the election year, financial year 24. So I think financial year 24 is going to be good, or at least maybe hopefully the second half of this year will be better than the first half.
Mr. Dalmia, good morning. This is Nantara. We can't have you on the channel and not ask you this one big question. The entire sector is up for a re-rating with Holcim wanting to exit ACC and Ambuja. That cement group, second largest in India, commanding an 11% market share. Mr. Dalmia, you know it, I know it, we've all been reading about it. Dalmia Bharat's name is doing the rounds when it comes to being interested as a bidder. Is it true? Have you bid? Have you not bid? Have you tried to club together a bid with financial players?
So look, I think, first of all, there is media speculation around Holcim's exit. Holcim has neither confirmed it nor denied it. But I would say that the fact that a lot of people are interested in this demonstrates to me that people have optimistic views about this sector. There are some new entrants also who are looking to enter, and large, diversified conglomerates, from what I've read in the press. So I think it gives me, I'm happy that people are thinking optimistically about the prospects of the sector. And these are all Indian entrepreneurs, who believe in India. And that means that the prospects for this industry are likely to be quite good. Point number one. I think point number two, we don't comment on speculation, but at the same time, anything that comes our way, we would definitely take a deep look at it, and we'll study it, deeply, and then make up our mind whether it is a strategic fit and whether it is at the right value or not. So I would say I would not comment on speculation, but this is definitely, if this transaction happens, it will redefine the landscape in this industry, and it will interesting times ahead.
Mr. Dalmia, while there may be a lot of speculations, Holcim is on record to say it will be exiting ACC Ambuja. It said so during its earnings announcement. So once again, Mr. Dalmia, I'm a journalist and I'm going to do my job. I'm going to ask you, is Dalmia Bharat going to bid, not bid? Is it putting together a bid, attempting to put together a bid? It's very, very large.
Look, as I said, we don't comment on speculation, but anything that is happening in our sector, we will take a close look at it.
The Indian entrepreneurs and industrial groups that you're saying is very positive that want to enter the cement sector. I'm guessing you're talking about the Adani group here, considered to be a front runner. Mr. Dalmia, what is the Adani group's entry into cement, and if it were to succeed with the Holcim deal or even attempt it, mean for the sector at large?
I would say competition is always good. And I think if, large group like Adani looks at the cement sector, to me, it is, endorsement that demand is going to boom in this country. We believe that infrastructure is going to be developed, housing is going to be developed in this country, and, real estate is also going to be a very strong demand factor. So I think it's an endorsement that this is a good industry to be in, where you can make money, and I think it's a bet on the India growth story.
Sure. So is the worst behind us when it comes to cost escalation and inflation?
Well, that's a very good question. I don't know the answer to that, but I think a lot of people are saying that we should expect, at least in this year, high fuel and energy prices. I also think that interest rates are heading north. So this inflation is a little bit tricky. How will the central banks react? How will the war shape out? And how will the economic sanctions and the global geopolitical situation play out are all highly uncertain at this point in time. So I think I would not say that the worst is behind us. And I think this inflation is real, and it is something that people have to be very, very careful about.
So you mean more consolidation after Holcim's exit?
We continue to believe that, and I think if you look at the last 4 5 years, 90% of the incremental market share, incremental growth has been captured by the top five players. And I think in this industry, the entry barriers are rising. Distribution and building brands is getting more difficult. The ticket to play at a minimum level is around 3 4 thousand crores now. So I think as entry barriers rise, consolidation will happen, and we continue to believe that over the next 10 years, more consolidation will happen in this sector, and banks will also be reluctant to fund players who are small and for whom this is a non-core activity.
Thank you, Mr. Dalmia, for joining in and giving us a sense as to what the outlook is when it comes to the company as well as the financials.